Good day. Ira Epstein of Linn & Associates with your Tuesday wrap-up, your metal market wrap-up. And this is for April 6, 2021, 5:05 p.m. Central Time. I'm a bit earlier than I normally am. But the markets are open and you're getting a little bounce. Most stock indices down today. Not a surprise. I told you strong Mondays. A big move on a Monday often results in an attempt at a reversal of some of that on a Tuesday. Then the market's sort of neutral and it tries to figure out what it does. That's what happened. When I look at the gold and the silver market, okay, interesting, but I don't know what beyond that. We'll talk about that in a minute. The dollar was down at the expense of a number of currencies which have rallied back. Euro's knocking on the door of 119. Remember, we were just pushing the 117 level. Now we're at 119. At these numbers, I wish there wasn't COVID. I'd love to go to Europe, but just not going to be able to do that at this point. When we take a look at a weekly area chart of closes, gold for the week is up $0.50. You heard me, 50 cents. Means the bias of the market is still down as you're under the 18-week average of closes at 1797.30. When we take a look at a chart here, I've been pointing out to you this would be a resistance zone. As the market fell like this, each time it rallies back, like to an area there, you fall down in these bounces. You couldn't even get up to these resistance points. This one actually did. It got into that. This is now, as you can see, coming into that resistance area. And we'll see if it can do anything with it. If it can clear it, that might give the bulls a ray of hope. We'll see. The pattern of the chart is still bearish. You still have lower highs. This high rather, is still under that. That's 1747.10, by the way. So you're still with lower highs, lower lows. The battleground's clearly the 18-day average. You get over it, you slip back under it, you come back to it. In the process, if you put on a position against this in the past 2 weeks, you haven't really moved one way or the other. Think about what I'm saying there. What really is happening is a different story. Because what the market's doing is it's creating sideways action within a Bollinger Band. That sideways action is often a base and or a top. Which one? Well, the fact that we've come down so much, we came back into an old support area. Until this low was taken out, you don't know. Now, if you get back and take out this after a lengthy sideways period, that'll be another bearish sign. Get back over this part, well, maybe the 1800 areas in the market. You don't know it yet. Right now, no man's land. You've got the trend down, the bias up, stuck within the Bollinger Bands, and overbought. So if you were to put the gun up here and say, make a trade, might as well pull the trigger. I wouldn't know. It's like flipping a coin. I don't see any bias one way or the other. Now, the gold-silver ratio made a challenge, as you recall last week, of the 70 level, and now it's backing off. In order for silver to show that it's going to gain on gold, it's got to, for a trend, it's got to get back under 68.15, the 18-day average of closed differences. Hasn't done it yet on that. When we look at silver, we see why. The silver market with today's rally has a higher high, lower low. Now what the market at first did was pretty clear. It fought a battle at the 200-day average in the Bollinger Band in a downtrend. An oversold one to make matters even worse. You slide it away, came back, you spent all of 24 hours underneath it, the band, got that right there on a close, came right back, and now where are you fighting? You tell me. You're fighting between the 200-day and the 18. So do I see a big trend? Not yet. Not at all. I see a downtrend that ended. I don't see an uptrend that has started. I see layers of resistance now at 25.38.5 to the 100-day average of closes of 25.73, with the market spending some time 25.09, the 200-day average. A real mess of a chart. In the copper market, as I told you, the psychiatry trade. Again, you are stuck. Sort of what gold is doing now in this sideways action. So you tried breaking out to the downside, and that's why it's called the psychiatry trade by me. Might as well call your shrink because you're going, this is it, it's going down, and then it doesn't. You go, all right, I'm dialing for a therapy session. Got it? Then you come up and you go, what the heck? There's no follow through. It's not even going there. This is what happens when a market goes sideways to churn. Again, base or top? Well, I lean towards the idea of a base with everybody coming out of COVID over time. In the platinum market, this market came back up to the Bollinger Band. So what we had done here, and just recently, this right here, and that was Thursday, last Thursday as we left for Easter. Higher low, higher high, momentum up. As long as you don't get back under 1156.20, the market is saying it's a buy at 1194.50. Now, please understand, it's a heck of a risk. You're pushing there, if I'm correct, about $1,700. I don't see the average trader doing it, but people do things. Target upper Bollinger Band if it can get itself going. So the market picks up yesterday, and today you make the target number and where you're stalling. That's it. The trend is up. You're nowhere near embedding, so I'm looking for some profit taking up here, some resistance point, but you've got to give the nod to the bulls. What we need is a better setup here if the market's going to attract the average trader. At least that's my thoughts on it. When we take a look at the palladium market, now I've got this right. Lower low, higher high. All right, I've been doing this wrong for 3-4 days, and I forgot to change it. Market came back today. I know there was something I have to change. So you're neutral, but you've kept an upside bias this whole time. You are overbought. Do I think that's attracting new buying money? I don't. But understand, this market's near all-time highs. So the platinum, the palladium markets, they're acting good. Copper is consolidating after it got up as high as 440, pulled back towards the $4 level, going sideways there. In the dollar index, once we started this decline, we left this uptrend, and I said that to you, I believe, yesterday. If the market's going to fall with the lost embedded reading, this is where it's embedded. Notice the red and the blue, they're just going sideways every day over 80. When you lose that reading, unless you get it back literally on the opening the next session, the odds favor price and the 18-day average are going to make a strong run at each other. I'm wrong if you would have taken out today's high before that occurs. Instead, you went right to the number. So now what? Well, the trend is down. The bias is down. Why is that all that way? Lower highs, lower lows. You closed under the 18-day average of closes. Momentum down. However, there's a heck of a risk here. Let's assume you go short at 92.40 and you put a stop at 93.13. You do realize you're going to be risking about $700 on that trade. You're with the trend. If the market's going to fall apart, down to here. But I question if this dollar is more about interest rates taking a break than anything else and the market needing to gather steam. I just don't trust it. In the Ethereum, you've got the embedded reading. You had 3 days in a row over the upper Bollinger Band. It's just begging to get back to the right-hand side. My rule of thumb is I count each successive day over the upper Bollinger Band is taking one of the 5 percentage points that the market typically, the word isn't that always, but if you go back in the history of a Bollinger Band, it will. 5% of the time the market will close outside of it. That's it. But you have to have a super strong universe. Well, you don't have that length of time in the average futures contract. So what I did is I came up with what's a rule of thumb? I count each successive close over it as taking away one of those percentage points. So coming in today, I gave the market a 2% chance of staying over the number and 98% chance of pulling back. Is that bearish? No. It's a sign it's just ahead of itself. I think that until the red line here closes under 79, the pros are going to buy the breaks in this market. So I think they're looking to come in on the long side. With that, I'm Ira Epstein. You have a great day. You might want to take a look at this ad. It will, I think, enlighten you about Bollinger Bands. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.